Red Cloud Financial Services is your preeminent source for mining industry opportunities. The team provides a unique, tailored marketing program dedicated to reaching the right people from its mining-focused global network, giving clients access to industry-leading events and conferences, retail and institutional marketing, plus an in-house growth-driven digital agency. Red Cloud Financial Services has access to some of the mining industry's most notable companies and CEOs.
Hello and welcome to this live core conversation brought to you by Red Cloud Financial Services. I'm Mark Bunting, the host of RCTV. We have an excellent show lined up for you today. As always, we're talking all about uranium and nuclear. If you have any questions for us, you can put them in the comments section on the right-hand side of your screen, and we'll get to them toward the end of the show. With that, let's bring in Scott Melbye, Executive Vice President at Uranium Energy Corp. But thanks for joining us today, Scott. Good to see you. How are you?
I'm great, Mark. Good afternoon, and what a pleasure to be on the Red Cloud Network and talk about uranium.
Excellent. And we love your setup there. I'm sure you've read all those books. You look very learned in your lovely, what looks to be a mahogany paneled library, something like that.
Yeah, it's. I think it's more memories and mementos from selling uranium around the world for the last 41 years. So I don't think that there's many countries that I haven't either been there looking for uranium to mine or uranium to sell to nuclear utilities. So it's many years of memories up there.
Okay, I'm looking more closely now. Yeah, more memories than books, but.
Yeah.
That's a perfect way to get into this because you do have that extensive history in the uranium and nuclear sectors as an executive, as an advisor, as a board member of various companies and groups as well. So can you give us a little snapshot of that background?
Yeah, listen, I feel very blessed to have spent my entire career in this industry. I started out in the early 80s with Nukem, the trading company out of New York City, and Westchester County in New York. Back in those days, trading uranium commodities. I was able to be a uranium fuel buyer for the Palo Verde nuclear station outside of Phoenix. But the bulk of my career has really been in the mining sector. Been in executive positions with 3 of the 4 largest uranium mining companies in the world, Kazatomprom, Uranium One, and Cameco. With Cameco, I was there for 23 years and led their global marketing subsidiary. And again, there wasn't many countries or reactors around the world that we weren't supplying in those days. But really in the last 10 years has been a much more entrepreneurial phase of my career, joining Amir Adnani at Uranium Energy Corp. And really, I don't think I've ever been more professionally fulfilled at UEC, really helping to build what has become one of the world's fastest growing uranium companies, particularly in the last 5 years with billion-dollar investments in North America and seeing that company grow, and also being the co-founder of Uranium Royalty Corp, which is a capital provider for new mine developments around the world, which is badly needed right now, as we need a lot more mine production coming on globally.
And Scott, you probably know we've had a similar conversation to this with Amir a few months ago, and yeah, he's a fascinating guy, and I can imagine how you're so fulfilled because things are really going at great guns over there. Now, you're a perfect person to ask, and I'm curious more so for my own edification, if you can compare and contrast what attitudes were like, what sentiment was like when you first started, which I guess was sort of early 80s, mid 80s, and then we were still in a post near disaster at 3 Mile Island kind of world. And then compare and contrast that with today's environment where post Fukushima, we've seen all sorts of governments coming around and there are all kinds of tailwinds for uranium and nuclear.
Yeah, I mean, the biggest thing that I've seen is in public and political acceptance for nuclear power. For much of my career, nuclear energy has largely been supported by the political right and opposed and vehemently opposed at times by the political left. And it's really a more recent phenomenon where we've seen the green energy transition really highlight the carbon-free and clean energy aspects of nuclear power. And I think the left really came to the realization that if they were going to rely on wind and solar to get to where they want to be with carbon emissions reductions, they're not going to get there without nuclear power. And so that changed very dramatically to a point now where, as in my role as head of the Uranium Producers of America, I love going up on the Hill, and it doesn't matter whether I'm meeting with a Republican or a Democrat. They support nuclear power. They get there for different reasons. The Democrats for the carbon-free aspects. For the Republicans, it's about abundant, resilient, reliable energy. But the fact that they're there together, and you've seen a lot of legislative success in that regard, and certainly that's reflective of public opinion as well. I think our electrified society, everything becoming more in homes and business, more high technology, more electric, powered by electricity in transportation, and now we'll get into the data centers and everything else. These societies value abundant energy for the things that it brings in terms of quality of life in a modern society. So nuclear has a huge opportunity. It's really great to be loved by not just half the world, but everybody seeing value in nuclear energy, what it brings to society today.
Now, you hinted at it there, Scott. The U.S. was a real global leader in nuclear in the 70s and 80s, as we know. So can you describe the sort of boots on the ground atmosphere that, as you see it, whereby American leaders, they want to get back to that. They want to lead in nuclear again.
Yeah, no, that's been a very profound change. Back in the day, Westinghouse and GE, were the global leaders in nuclear power. Every nuclear power program, every country around the world wanted to be in nuclear, and that meant going through either Westinghouse and GE. And for the United States, that meant 50, 60, 80-year relationships with countries that were very important on a geopolitical level. Now that leadership is really been taken over by China, by Russia, and you see where they've made inroads in their client states and kind of left the United States behind. I'm hopeful, and I think our industry is hopeful that the U.S. has been so successful with small modular and advanced reactors in our nuclear navy, the 104 reactors in the 84 submarines and aircraft carriers since the 1950s have operated safely, effectively, and efficiently. We know how to do that, and you see the number of American technologies and companies that are emerging in the advanced reactor and SMR space. I'm hopeful we can regain that leadership, and of course that's going to require fuel cycle leadership as well. And I think that's another big change. Back in the 70s and early 80s, the U.S. Department of Energy was the only game in town for enriched uranium. And as we know, that's changed dramatically now with Urenco, Orano, and others that have come into that space. And I think, in North America, we have allowed our fuel cycle companies to atrophy. A heavy reliance on countries like Russia for nuclear fuel doesn't seem like such a good idea today. So I'm really excited right now about seeing American uranium conversion enrichment really get back up to a level where we need to be. We were independent of the Russian supplies before the breakup of the Soviet Union. We can get there again, but it's going to take a real concerted effort.
So the long-term situation looks very positive. In the near term, and currently we're in earnings season, for example, and many companies are coming out and just literally pulling their earnings guidance because of all the global geopolitical stuff. So I'm just wondering, again, from your perspective and companies you're talking to, clients perhaps, are you seeing an impact on the uranium nuclear sectors? And what about at Uranium Energy? Is the company being directly impacted as far as being able to make business decisions?
Well, I think it's frustrating for us in the uranium industry, both as investors and both as management running companies, because we're probably in a situation now where I've never seen in my 41 years better fundamentals for nuclear energy, better fundamentals, supply and demand for uranium, the imbalance that we're currently in, the geopolitics, the mega trends are all pointing so positively for uranium and nuclear power. Yet most of the companies in the space have been, setting their 52-week lows over the last 6 months. And that's very frustrating. Now, a lot of that is due to the broad market anxieties around Trump's policy on tariffs. That will subside at one point. And I think when it does, I think you're going to see, and I hate to use such a dramatic term, but I think you're going to see rip your face off rallies in uranium equities and in the underlying commodity uranium in the spot market. I think investors are obviously seeing a lot of anxiety in global markets today, but they should be looking at the industries that are best poised to come out of this. And I can't think of an industry or investments that are better positioned than uranium right now. So I think we just need to stick to, at Uranium Energy and Uranium Royalty, we can't change those big issues, global markets issues, but we can continue to position our companies to come out of this, better than we went in, and that's truly the case in both companies right now.
So is it safe to say, Scott, without touting your own companies or any uranium companies, but in a general sense, for investors, if they're not invested already in the uranium sector, or if they're underwater, or their heads are above water and they're doing fine, but we'll look back at this period as really a great time to invest at depressed levels.
Yeah, and again, you always have to come back to the fundamentals of our uranium market and the fundamentals of the businesses, the companies that you're investing in. If you do a deep dive on them, you'll find that they're trading at significant discounts to net asset value right now. So, if you've been a long-standing uranium investor, you persevered, and you've kind of weathered this downturn. It's frankly more than a downturn. It's been a correction in uranium equities. Know that you're holding companies that are far more valuable than they're being priced in the market right now. So hang in there, be patient, continue to hold. But the advice I've been giving investors is, your favorite uranium companies are on sale right now. Add to the positions. This is a great generational opportunity, to be able to buy these companies, which are, the bull market that we're going into over the next 5-6 years. It's not going to be sort of the flash and crash of 2007, 2008. I think you see a fundamental market where we're now, nuclear power is growing, on track to double by 2040, and we have aspirational goals to triple by 50. Mines aren't being brought on fast enough to meet that demand. We went through that bear market, which was 10, 11, 12 years downturn. We missed entire cycles of uranium exploration and mine development. So even though, we're going to see really strong price signals as the spot market recovers, I think over the course of this year, the long-term prices continue to remain strong and increase. That would normally, in a normal commodity, would bring on a lot of standby production. That's just not the case in uranium. The low-hanging fruit, the restart operations, have already restarted. Boss's Honeymoon in Australia, Langer Heinrich in Namibia, the U.S. mines, those were already built and on standby and have restarted. And incidentally, even that low-hanging fruit, has shown challenges. So even restarts of mines, are challenging. Mining's difficult. Then you go on to the greenfield mines that are needed to be brought on around the world. The 5, 6, 7, 8 new mines that are probably needed to come online between now and 2030. They're new operations, and they may be in parts of Africa that are challenging, or in Kazakhstan, which might be largely off limits to us going forward. So, the dynamics are incredible. If you haven't placed your chips on your favorite uranium companies by this stage, you need to do so, because I think we're going to really see that recover. And we can speak to why we see that in the uranium price as well.
Well, do you want to carry on there with the pricing?
Yeah, I mean, obviously we've had a situation where uranium's been trading down in the mid to low 60s. We've had extremely thin volumes traded in the spot market. But I point out that the long-term price, the price at which producers are willing to sign long-term contracts under a base escalated price, has remained firm and strong at over $80 a pound. And just on pure market fundamentals, you can't have an $85 long-term price and a spot pricing in the low 60s and have that prevail for very long. For one thing, the carry trade, the traders will come in, buy the spot material, sell it forward to utilities in competition with the miners until those spot supplies are fully depleted. And I don't think we're far from that level right now. We did see weakness towards the end of the year and into January, February. We had the liquidation of the ANU inventory out of Kazakhstan, which was about 2.5 million pounds. That's a real fundamental supply source or overhang on the spot market. But that's largely gone now. And, we've just seen in the last couple of days a lot of interest now in the spot market. Again, we have 2 long-term RFPs that are in the market right now, 1 domestic, 1 North American, 1 international, and 2 spot requests that have hit the market in the last 2 days. And what's happened? We're seeing bids this morning for supply at uranium at Converdyne in the 67.25 bid level, and the offers closer to 68. So it doesn't take a lot of demand to hit the market, to really test those thin supplies in the spot market. And remember too, the long-term volume contracting has been way below replacement levels. That can't go on forever. Utilities need to surface. And I realized there was a lot of things they were waiting to see shake out. The Russian ban, will waivers be granted? Now you have tariffs and you have other things that have kind of kept them on the sidelines. But every month they delay their procurement, they're 1 month closer to when they really need that supply. And I believe that when they come to the long-term market, they're going to go to the producers and say, okay, we're ready to contract long-term. And they're going to find very little supply available from existing miners. They've heavily committed much of their production through 2030. And I think even some of the emerging miners that, some of which haven't even turned a shovel yet, are already committing significant volumes of future production. So you might see very little material being available in the long-term market, and what is available to utilities is going to be priced, not at the $65 spot price. It's going to be priced at the long-term price, which probably won't stay at 80, 85, and will, head north towards 90 to 100. And if they don't like those prices in the long-term market, their only option is to come back to the spot market, and that kind of volume can't be handled by the thin supplies presently in the market. So I think we just have to let this play out, and it will play out over the course of this year. Sometimes we see the market is quiet during the summer months. I kind of think we may have a more active market over the course of the summer. If not, things really kick in at the WNA first week in September. But I think if buyers were smart, they wouldn't be putting off purchases at this stage. They should be getting out ahead of the rush.
That was really good information, Scott, and perspective as well, and context on pricing. Now, we know there's been a surge, and it's sort of a new pillar of a sort for the uranium story, this demand from artificial intelligence related data centers. And we know that some of the big tech companies, Microsoft, Amazon, among others, they're striking arrangements for co-location situations whereby they would have an SMR, for example, a small modular reactor right beside the data center, or near it anyway. That's the plan long term. But we're also starting to see reports and stories that the Microsoft and others are already scaling back and the capex has been huge, of course, in the last year or so, or even longer. So where do you stand on that? What are you seeing? Do you think this pillar from data centers will remain and is going to be strong and steady, or are we seeing some of that narrative sort of lose steam a little bit?
I don't think it is. I mean, I do think there are more rational kind of views of how much infrastructure is needed going forward. But let's look at it from both the U.S. perspective and from the company's perspective. The United States is not going to fall behind and lose the AI battle to China. That's just, we're not going to let that happen. And the DeepSeek story that came out, I know that kind of rattled markets and really hit uranium stocks quite hard. I think that's ridiculous. I mean, if you go to the company side, there's only one thing that stands between these tech companies reaching multi-trillion-dollar market caps is if they can fully take advantage of AI. They need data centers to run the AI, to run their models, and they need energy to power the data centers. So, I don't think we're going to see that fall off dramatically at all. And I think we're continuing to see electric utility companies really pressured in the near term by the data centers just trying to come in and plug into the existing grid. The grid really doesn't have that much reserve margin in the United States available right now. I met with Governor Youngkin from Virginia about 4 weeks ago, and he said that the Commonwealth of Virginia was already seeing huge demand load growth from just electric vehicles, electrification of homes and businesses, and then the data centers came into Northern Virginia. 20% of what they generate in electricity in Virginia today goes to data centers. It will be 40% within 2 years, not 10 years, not 5, 2 years. And so it is very real. The big winners are going to be natural gas and nuclear. But if you think, well, okay, natural gas is unlimited and it can fill all the demand. No, there are pipeline constraints, there's drilling constraints, there's even gas turbine constraints. So you're going to need both natural gas and nuclear to really step up. And on our end, that means licensing, permitting of SMRs. It can't take 8 years to permit these plants. They need to be moved along much quicker and in less than 2 years. Fortunately, we have an administration that's willing to break a few eggs when it comes to the regulatory timelines and try to speed that along. So you are, seeing enormous interest in SMRs in this space. The low-hanging fruit in this regard has been the tech companies that have recognized the existing nuclear plants, trying to go to them and go behind the meter, if you will, to take electricity from a nuclear power plant before it hits the grid. There's only so much of that, and the program Talon's pursuing, with Amazon's being challenged by FERC. But you're also seeing the restart of idled reactors like 3 Mile Island, Palisades, Duane Arnold, and others. So these are very exciting developments. I think in that doubling of nuclear power that we're already on track to achieve by 2040, it really hasn't yet encompassed this kind of demand. So I think it's going to be gravy on top, but it's going to be very significant. And that's how I think we get to the tripling by 2050. You're going to have companies, it's not going to necessarily be Constellation or others that are building plants, although I think they are going to be engaged in adding capacity. But you're also going to see this driven by the tech industry, which have the capital and the innovativeness, and they do desire to as much degree possible clean energy for these data centers. I mean, they'll go with gas as a bridge to get them there. But very exciting time. But we're going to have to permit and license these SMRs fast, and we're going to have fuel cycle upgraded to be able to satisfy that kind of demand.
And with SMRs, Scott, how soon do you think they'll become commonplace? Is that still several years away, or is the time frame maybe shorter?
I think it's shorter than most people realize. The first of a kind units are always the toughest. They're the riskiest to invest in. So it's not surprising you have the US DOE, the UK government, Canadian governments engaged in cost sharing The ARDP program in the United States is looking to advance, companies like NuScale, X Energy, TerraPower. The TerraPower project's moving ahead in Wyoming, and believe me, ask them if they think that they're going to be in production by 2030. They fully believe that, and they're investing and they're submitting license applications to achieve that. X Energy doing the same with Dow Chemical in Texas. NuScale lost their original customer in terms of the municipal co-ops in Utah, probably not the best customers for a first-of-a-kind unit, but they're very actively engaged in Romania in building their first plant over there. They've already manufactured a number of modules, and they already have NRC licensing to move forward. So I think, we're going to see this kind of demonstration period in the 2028, 29, 30 timeframe where these first-of-a-kind units come on. But we also have a number of other micro and smaller reactors, the 2, 3, 5 megawatt programs, a lot of which are being encouraged by defense programs. Project Pele could be in production by next year, and Army, Navy, Air Force are all pursuing various micro reactor programs to supply power to bases in contested logistics bases like Guam and others, where we need self-contained power and we need it fast. And so again, we got to build them on time, on budget. But if we do, we have thousands of these coming on order in the 2030 on time frame. And I think we'll revolutionize the way energy is generated and distributed in 2030 onward. So we have a little bit of time to ramp up, but not much.
All right, very interesting. We have some questions waiting in the queue for you, Scott, and we'll get to those in just a while. Thank you for those who are watching and asking some questions. Just wanted to focus on Uranium Energy Corp. Itself seems to be very well positioned in the United States with these 3 hub and spoke platforms. Can you update us briefly on some of the latest developments, such as some of the production ramp ups that the company has been doing and acquisitions as well?
Yeah, it's, the last 5 years has been a very acquisitive period with over $1 billion invested in these production hubs and our aspirations up in Saskatchewan with Rough Rider. But I think the focus of the company now has really shifted dramatically. It's all about the ramp up and development of additional well fields and ramp up into production. So we've really made a transition over the last 12 months from acquisition to now mine development. And so that's very much underway. If you go to Christensen Ranch, Irigaray today, the amount of, I think we've got 12 rigs operating in and around the new additional well fields that are coming online there. We have been producing from the existing well fields that shut in from 2018. But now, we're eager to get these new well fields on in 10.7, 10.8, and be able to get that production ramped up over the course of this year. And then the same thing has been happening down in South Texas. I was down there about a month ago as well, and saw the concrete footings being poured for the ion exchange columns. Those are in place now, and it's really a matter of connecting the well fields to the ion exchange columns and look to be in production startup there by the end of the year. So very much development phase for us. It's an exciting time. It's been a time of hiring. We've been fortunate to bring on a lot of new people with uranium experience that are eager to be part of a growing program. And it's just all hands on deck to get the production out of the ramp-up phase and into commercial production. And then at Sweetwater, we have a unique opportunity there as well. With all these executive orders and a desire by the Trump administration to expedite regulatory and permitting timeframes, we've submitted the Sweetwater project to the White House as one of those potential projects. We're fully permitted for conventional mining in the Great Divide Basin, but we'd like to amend that to allow some of that ore to be processed by ISR and amend the mill, make some changes to the mill to allow receipt of loaded resins. If you do that the old way, it's probably a 5-year license submittal if you're lucky. We've submitted a request that this be a simple license amendment and be done in months rather than years. So again, the desire is to really build out our 12 million pound annual capacity, license capacity in the United States between Great Divide Basin, Powder River Basin, and South Texas. And, I think for now, I mean, we're probably targeting 5 to 6 million pounds of annual production by the end of the decade, but know that it could be more if we get, signals from the U.S. government that U.S. origin uranium is needed for defense needs. We can accelerate development, or if, tech companies and these SMR companies need U.S. origin for their fuel cycles, we have that capacity to grow. But we are taking it, we're taking our signals from the markets. At $65, I'm sure, we don't want to blow our brains out here and produce all we can at 65 when, prices next year will be, 100 or higher. So we're measuring the development and the startup the best we can. And that's another advantage of being unhedged. We're not forced to produce into contracts ahead of the time that we would want to be in production. So we have a lot of flexibility there.
All right, Scott, one more question from me, and then we'll get to questions from some of our viewers. And by the way, Donna Witchers says, great presentation, Scott. Do you know Donna?
I do, yeah. She's been amazing, is a industry legend, frankly, in ISR and mining in the United States. And to have her with us and guiding us has been amazing. And then bringing on Brent Berg, working with Donna. Brent came from Cameco. I worked with him there for many years. These are good examples of the kind of people that we have on the operations side, and we're very fortunate to have.
I want to ask you, Scott, about the impression that the markets have, investors have about Uranium Energy Corp, because in a comparative sense, compared to, say, Cameco, you're still kind of a new kid on the block. Yes, you've been public for about 5 years, but that's a much shorter history than some. So looking back 5 years since inception as a public company, the stock's up roughly 350%. So no problem there. But would you say that the market generally understands the story, or are you always in sort of a education mode when you go to conferences and things like that?
Yeah, I mean, I think it's sinking in now. The company started out as a small Texas startup almost 20 years ago and produced from the Palangana and Hobson operations. That was the origins of the company. And now, fast forward to 2025, I think we've been the fastest growing uranium company in the world. We're the largest U.S. uranium company measured by market cap, by licensed capacity and resources. I mean, we have 12 million pounds of licensed capacity. We have 500 million pounds of resources, which in North America puts us up in the neighborhood of Cameco, Orano, and maybe even ahead of NextGen. This is pretty significant. 300 million pounds of that 500 are within 100 miles of these 3 processing plants. So not only do we have great resources in the ground, we've got proximity to processing centers to turn that into yellow cake, which is ultimately, at the end of the day, is all that matters. The market cap, we're trading at a little over $1 billion, $2 billion today. We reached, we were up over $3 billion in this last cycle. But our market, our liquidity is also, I think, second only to perhaps Cameco in terms of trading, the 8-9 million shares that are traded every day in the New York Stock Exchange. So I think we have become a go-to name in uranium for both institutions and retail. It's a very simple story. It's not a Central Asia story or a complex African story. It's Texas, Wyoming, and Saskatchewan, and projected to have very low costs and a very robust ramp up of production over the next 5-6 years. So I think we've come a long ways. And then, our sister company, Uranium Royalty Corp, I got to tell you, launching this in December of 2019, which was still kind of in the bear market, we were able to acquire many of our royalties at a huge discount to net asset value. We now have 24 royalties on 21 projects, including Cigar Lake, MacArthur River. We've got interest on Millennium, Dawn Lake, Langer Heinrich, Lance, a real growing portfolio of producers. But what's really exciting right now is with the pullback in equity prices, streams and royalties have become a very attractive mechanism for miners and developers to continue their pathway to production, whether they're halfway, three-quarters, or they're in the last $25 to $50 million capital required to get into production. Do they really want to go to equity markets and raise capital through, with their share price at a 52-week low, knowing it's going to be 3-4 times higher 2 years from now? No, they would rather do something non-dilutive, and royalties and streams provide that mechanism for them. And it doesn't take a lot of uranium to be encumbered in future production to raise a lot of money today, like 25, 50 million seems to be a ticket size for some of these opportunities that we're looking at right now. But the pipeline has never been stronger than we've seen right now at Uranium Royalty.
To your point, Scott, about UEC becoming a real go-to stock for investors on the New York Stock Exchange, average volume for your company stock, 8.5 million, compared to Cameco trading on the NYSE 4.4 million. So nearly double. Very interesting. And I'm sure that's information you already know. Let's get to, let me find this first question here, because it's he was first in the queue. Let's get to him. I've kind of lost it here. Hold on a sec. Sorry. Here it is. Clay Montgomery, can you please comment on the World Nuclear Fuel Cycle, which is an international forum, any shifts in sentiment, and also any more discussion about enriched uranium product buying from China?
Yeah, no, globally, I think it's interesting. I mean, I'm engaged in the WNA working groups for uranium supply and demand, and sometimes that's an interesting process because it's a supply and demand forecast by consensus between buyers and sellers, which is sometimes hard to get at. But I think we're right now, the growth from existing and reactors that are under construction, that's quite predictable, and that's kind of getting us to the doubling. I think where we're facing a lot of debate is, well, how much SMR demand do we factor in, how soon? So that's an interesting process that we're going through there. But we do know it's more, not less, demand going forward. On the China story, that's very interesting, because we, as the Uranium Producers of America, we were very successful legislatively last year, getting the Nuclear Fuel Security Act to direct over $3 billion to purchasing domestic uranium conversion enrichment for HALEU and LEU. Those programs are proceeding. We managed finally, 2.5-3 years after the second invasion of Ukraine, we finally got the Russian uranium ban in place. I think in the give and take of those negotiations, we did have to have a phased in approach, so the waivers through the end of 2027. That's fine. 2028 is tomorrow in nuclear fuel terms. So those are all great achievements. However, we saw a troubling development at the time the ban was going in place. We saw an unusual and abnormal spike in Chinese purchases of enriched uranium from Russia. And then at the same time, we saw abnormal and large amount of exports from China to the United States. So this is the old game that you see in oil sanctions on Iran and other countries, where you play the shell game of displacement swapping and move material through a third country to evade sanctions. Congress is onto this. Commerce is onto this. Nobody thinks it's a good idea. We just got off a very dangerous Russian addiction. We don't need to now get on board with a Chinese addiction. So we're lobbying, full disclosure, to extend the uranium ban on Russia to China. I think we have a lot of support in the US Congress and in the administration for that. And this Section 232 investigation, which has emerged in the last week, could be another vehicle to make that happen.
All right, great. Great answer as always. Let's move on to a question from Terrence Ortslund. He's saying, can you review the most recent utility inventory levels in terms of months at major nuclear power geographic regions?
Yeah, great question. We've seen, obviously nuclear power plants carry significant inventories, both working and strategic, to feed the nuclear fuel cycle. When the fuel is delivered on site, the plants run 18, 24 months on that fuel load, but that fuel load, is a couple years in the making before it gets to the site. We've seen inventories at U.S. reactors, for example, kind of come down to 2 years forward demand and maybe less than that now because of the delays in the procurement cycles. If you're not signing long-term contracts at replacement levels, you're by definition drawing harder on your existing inventories to continue to feed the fuel cycle. So I think utilities are probably getting at a level which is a little uncomfortable for them. You like to have a little more cushion than that, but that's also a very bullish factor for the market, that inventories have been decreasing, not increasing in the last 2-3 years.
Another question from Terrence here for you, Scott. This has to do with uranium stocks, and he's saying, do you think a fair market value calculation is needed when an investor is looking for various types of companies to invest in? You need to look at economic resources, reserves, dollars per pound in the ground. You need to make that kind of calculation.
Well, I think the wise investor would dig deep in these companies. And I guess my general advice to uranium investors would be similar to the advice that I give ourselves at Uranium Royalty Corp. Our goal is to build a portfolio of uranium investments, and obviously through due diligence, try to pick and choose amongst the better projects, better management teams, better deposits, and geopolitical jurisdictions to build that portfolio. So we do a very deep dive. We want to find out which companies are going to be the ones that step up and are able to fill this near-term gap between now and 2030. And believe me, with our global search for those kind of, we'll call them unicorns, those are very rare. We've seen the restarts of existing mines move forward. They're in production. Some of them have struggled to get up to kind of full rates of production, but they're there. Now we need the new mines coming online. And so as an investor, I would look at all those things and I would say, okay, how likely does this company have the capital needed? Do they have the management teams? Do they have the resources? Do they have geopolitical license to operate in their jurisdictions and invest accordingly? But listen, this is, I think we're on the verge of a historic bull market. So, I think you can spread your chips around and hold a portfolio of companies. You can have some of the near-term producers. You can have some of the midterm, even some of the big, massive mines in Canada that, will be the world's largest mines at some point, but still have a few years to be into production. Those are smart investments. And then, if you want to dabble in the exploration companies, those that have the best, that are positioned on the best deposits and the best jurisdictions, if you build a portfolio based on that, you're going to do very well. Now, there's a lot of companies that are not investable out of the 200 plus uranium companies out there. You have to do your own homework and do your due diligence. But I think it's going to be a really generational opportunity for uranium investing. And even over the course of 2025, you're not going to have to wait 5 years for this. I think you're going to see really outsized gains on uranium equities between now and the end of the year.
All right, Scott, a couple of more questions here and we'll wrap it up. This is from Daniel McConvey. Can you compare today's environment for the uranium sector to certain periods of the past? Are there any periods that have been similar?
Yeah, well, hi, Daniel. Great question. Listen, the last bull market was really built on the expectations of nuclear power growth. It was the emergence and the potential of the nuclear renaissance and the emergence of China. Well, this time around, China has emerged, and China is adding 4 or 5 reactors a year, and we're seeing the growth more broad-based. And it's not just the developing world that needs electricity in 2025. You have the developed markets with data centers and electrification of society need to build baseload capacity again. And so I think that's very different than past cycles. I think you also, most of my career, 41 years, I've always been looking at that big mountain of secondary supplies and inventories that were built up in the 70s and 80s. We don't have that anymore. So that was always the most opaque and the most terrifying for the uranium investor. We know how much the world produces each year. We know how much the world consumes in reactors each year, but we didn't know exactly what the inventory overhang was. I think now we have a pretty good idea, and it's pretty minimal. We're not in an inventory-driven market now. We're in a production-driven market, and you can handicap that by lead times to production, cost of production, availability of production. So, Daniel, yeah, it's much more robust fundamentals now than I would say in the last bull market.
Last question for you, Scott. There's no name attached to this, but he or she believes that you had a trip to Niger recently. Is that true? If so, can you comment?
Yeah, very interesting. So the best part of my job at Uranium Royalty is going out and meeting with miners and developers all over the world to see what we can do in terms of capital provider to help them move their operations forward into production. And I had an invite from Steve Roman to come see their operations, and I jumped at it because the conventional wisdom after the coup in Niger was that Niger is uninvestable. And I said, well, is that really the case? So I wanted to go see the general security and safety of the country. I wanted to meet with the local government, the federal government, the mines minister, and I wanted to go look at the operations. And I was impressed on all 3 fronts. Stephen's done amazing things under the most challenging circumstances, first COVID and then the coup and border issues. I'm very impressed with the mine that he's building there. If you go and visit, you'll see a mine that has the same kind of safety culture and professionalism as you might have in Saskatchewan, Canada. Is it a very poor country? Are there challenges to logistics? Absolutely. But I think all of those are very manageable. And one thing that encouraged me is that the government that now has a 5-year mandate to govern Niger is very open to US and Canadian investment. They are getting offers from China and Russia for that investment, but I think they realize that with that comes a lot of strings that they may not want to take. And so I was very pleasantly surprised. And, that's a good example of a mine that needs to come on to help fill this gap between now and 2030. And I think Stephen will be one of the early movers.
You may know that Global Atomic is a client of Red Cloud, and we've interviewed Stephen Roman before, and he talked about his very long, circuitous journey in Niger, and that was before we had the coup. So he really has been through the ringer, but as you say, he's going about it the right way, and he's going to come out the other side, we think, with a great operation. Thanks so much, Scott. You really pulled back the curtain for us today. You gave us so much information and context and perspective on the uranium sector. We appreciate it. Thanks for your time today.
Great. Thank you, Mark. Take care.
All right. To Scott Melbye, Executive Vice President at Uranium Energy Corp. Thank you very much for your questions. Thanks for watching. We'll do it again, and we'll see you next time. Take care.